What's going on, guys? It's your boy Jermane'S. Listen, today was a very interesting day in the market. So, the market started off trading, teetering up today because everyone was anticipating the Fed meeting today and, what the Fed's going to talk about rate cuts. By the way, today was Kevin's first FOMC meeting. And, you know, That's, by the way, if you guys don't know who's Kevin, that's a new Fed chair, and he's Trump's handpicked man to run the Fed, to really lead the Fed in the direction he wants. So, today was his first day on the job. Well, not his first day on the job, but today was his first public meeting on the job. And we all were expecting that the Fed to hold, and they did hold rates between 3.50 and 3.75%. You understand? However, the thing that surprised everyone was that they're planning to do a rate hike at the end of the year, so on and so forth. And that's what's really get the market going. But before we get into that, the market started off really well. Everything was up. All the major averages, the Dow Jones, the NASDAQ, the S&P 500 was up, all the way up. And some stocks were running well. Financials were running well. I think financials were leading the day. SoFi, Robinhood, the banks were running hot and everything. And, mind you, we all expect. Honestly, I expected them to hold. And with the new narrative, the war is over. And, well, not necessarily the war is over. We have a peace deal. And, with oil tumbling and with oil tumbling, with, the threat of a war blocking the Strait of Hormuz is pretty much over. I didn't expect the Fed to really signaling some sort of rate hike by the end of the year. Everyone is expecting them to either signal cut, because when we start the year, we were expecting 2 cuts in 2026 before the war started. We were expecting 2 cuts, but I don't know, man. I don't know. So the rate hike spooked the market and everything tumbled. Everything tumbled down. The Dow Jones was down 400 points, S&P was down 1%, and NASDAQ was down big too. After the Fed signaled that, they might have a rate hike at the end of the year, or so on and so forth. Everything was down. So what that means, they're basically telling us that with the inflation from the energy-driven inflation from the war is it's pretty much passing through the economy at this point in time now, and it's hitting all aspects of the economy in this time at this time now, and they're pretty much watching what's going on. You understand? They're pretty much watching what's going on in a way that they might hike, even though they're signaling a hike at the end of the year. I don't think so. I really don't think so. I really don't think they're going to hike rates end of the year. They might do a hike, but I don't think they're going to definitely hike rates at the end of the year, because, the inflation that is here is energy driven. And I think once energy prices stabilize, everything will follow suit. And that's what Trump was pretty much talking about at the G7 summit today in Europe. I think today it's a close, and he was giving a speech, and he was saying pretty much oil is stable right now, going down, and once the oil price goes down, everything will follow suit, which is true, which makes sense economically, and which makes sense from all angles when you look at it, because oil dictates the price of everything. And once oil is up, everything gonna be up. And once oil is going down, everything gonna be going down. So, I think the market is just having a temper tantrum, and the market didn't want to hear anything about rate hikes, even though a lot of economists were projecting a rate hike. Not this meeting, but the last meeting at the end of the year due to the war. But the market didn't want to hear that from the handpicked Fed leader that is handpicked by Trump. And Trump is for lowering rates. And now that Kevin is in, the market was only looking for a signal from Kevin that rates are gonna be lowered and not rates are gonna get higher to really cool off this inflation. So, what does this mean for the everyday person within the economy right now? What does this mean for you and I, and for everyone else? This means that the rates for borrowing are gonna get higher. You see the 2-year went up, 2-year notes went up, the 5-year, the 10-year, the 30-year, all the major rates went up. And the 10-year is one of the most important financial instrument in the United States. The 10-year yield, the most important financial instrument in the United States. And you have to watch the 10-year yield and see how it's moving, because everything is tethered to the 10-year yield. Your mortgage rate is tethered to the 10-year yield. Then your car note is tethered to the 10-year yield. Your credit card interest rate is tethered to the 10-year yield. Everything you think of, name it, is tethered to the 10-year yield. And that spiked today. So what it means for people like us in the economy is that it's going to cost way more to borrow from the banks. The loans, the interest rates on loans are gonna be higher. Um, Mortgage rates are gonna be even higher, um, higher than what it is now, because mortgage rates are approaching almost 6.5%, so on and so forth. It's gonna get even higher. Uh, car notes, car notes are 6-7% now, and if you have a subprime loan, you're paying almost 30% if your credit is terrible, and you have a subprime loan car note. You're paying almost damn near 30% to drive, plus insurance, plus all of that. That's crazy. That doesn't make any sense at all. You know what I mean? So that's what it means for us right now, borrowing. That's what it means. Everything is just gonna get out of whack and out of hand, and everything is going up because with the rates up, what they're trying to do is just choke off inflation. That's pretty much what they're trying to do, is choke off the inflation within the economy. That's what they're trying to do. And with the rates up, that's what pretty much rates do, choke off inflation. So we just got to know what we're doing, pretty much. We just got to know what we're doing as it relates to how we navigating these rate hikes and possible rate hikes and these time. But the market, as I said, was really spooked. A lot of us can look at it as buying opportunity because, as I said before, personally, and I'm not no financial expert, and I'm not no economist or anything, but I personally believe that they only signaling a rate hike, but it's not going to happen, because if if we go on without any other confrontation and without any other hiccups with this peace deal with Iran, and the strait remain open, and everything remain, and the oil begin to flow again, as Trump said, then I really believe that the inflation, the energy-driven inflation, because this inflation we're facing right now is really energy-driven. It's not like 2022. That inflation was crazy and terrible, but this one is energy-driven. And once this energy situation is sorted out, and it trickles down in the economy, everything will change. And the next Fed meeting, I highly think they won't be talking about any rate hikes, but they're probably looking to lower rates. They're probably not going to cut, but they're probably a signal lowering rates. So this temper tantrum the market had today is pretty much an overreaction to the idea that rates might be going up. And as I said, personally, I just believe that people were just looking for Kevin to be very dovish, coming and talking very dovish and really signaling rate cuts, because why not? That's Trump's hand-picked man to lead the Fed. And what Trump's advocating for? Lowering rates, lowering rates, lowering rates. The United States is one of those countries that has the highest rate. Like, all the major G7 countries have negative interest rate, or zero, or close to zero. Yes, search it up. All the major countries has 0% interest rate, negative interest rate, or close to negative. Only in the United States we're running rate this high. And I get it. I get it. But if you think about it too, ultimately the game plan is, and as I said, I'm not sure how long this will take to implement, and I've been talking about it for a while now, but ultimately the game plan is to inflate away the debt we're having, or $39 trillion in debt. Yes, that's the game plan. Inflate away that debt. And you cannot inflate away the debt with high interest rate. Rates has to be lowered for the debt to be inflated away. You understand? So ultimately, this is just work. What happened today is just working against the game plan. And the game plan is to inflate away the debt, and it cannot be done without lowering rates. So I think this is overdone, and if this might be a buying opportunity if you look at it that way. And this is not a moment for anyone to panic, and because I believe we have passed the worst, man. Look at right when the war just started, March, April, those months were ridiculously crazy, man. And I don't think we're back in any type of whiplash seesaw situation with the market, but yeah, that's what I think. That's what I think's going on. So I don't think this is anything to be alarmed about. This is just a situation where the market is just spooked, and the market is spoiled. The market has been listen, chips, data center, AI plays, energy infrastructure, been running for a while now, and they're pretty much looking for the cheap money to get into that area and to continue running. You understand? So I don't know. I really don't know. I just think that this is overdone and this is a buying opportunity, and people should really take heed and get in and buy up what you can, because you know the writing is on the wall. Writing is on the wall, guys. Writing is on the wall. Writing is on the wall. Definitely. Somebody said true. Yep, it is on the wall. Yeah, guys. So let me know what you think, man. Let me know what you think in the comments down low. And another moment in the markets where things just look out of whack, but it's actually nothing to worry about. Well, we were doing good earlier. We're definitely doing good. Definitely doing good, but this Fed news, and again, we all expect to sometimes, when the market is in a very nervous state, whenever there's gonna be a Fed meeting, like there's always nervous, and I think this is like an algorithm sell-off too. When the algos hear certain things and they, who knows how it is set up, but was like an algorithmic sell-off in a way, and who knows, man? Who knows? But I don't think there's anything to be concerned about or worried about, because ultimately everything will stabilize, because the ultimate play is on the books, and this what happened today goes against the ultimate play, and the ultimate play, they're gonna see through that play. They're gonna see through that play. Bitcoin is gonna be going to the moon. Um, uh, all asset prices are gonna be going to the moon, and they're gonna see through that play, man. I'm telling you. That's a big play. Take it from me. But this is not financial advice. This is just entertainment purposes and educational purposes. You know what I mean? So that was it, guys. Please remember, like, comment, share, subscribe. Click that notification bell so you'll be notified whenever I drop anything. And listen, I would like to know what you guys think. Let me know what you guys think in the comments. You know what I mean? What are you looking out for? What are the signals you're looking out for, to see what's coming? And what are you looking out for? What do you think? You understand? Because these are some times we need to really look into the markets and look what's going on, and see if we could pick the sense out of the nonsense. So let me know what you guys think, man. Comment it up. Let me know what you guys think. Definitely let me know what you guys think. If this is a moment where you take an opportunity to buy more, or take an opportunity to reposition, or whatever. But let me know what you guys think, man. Please remember, like, comment, share, and subscribe. This is your boy Jermane's Views, and I'll definitely catch you in another video, guys. So let me know what you think, man. All right.